stocks of some grocery stores have been struggling lately, leading to some dramatic changes in that industry. Owen Shapiro with Leo J. Shapiro and Associates is here to talk about the latest trends. Welcome to the show, Owen.
Thanks.
So we've got some large grocery store chains like Kroger, Winn-Dixie, Safeway, kind of having a hard time making money, it seems, just by looking at their stock charts. They're low today compared to 10 years ago. What's going on?
Yeah, in general, that sector's trailed the stock market, and they've been under a lot of pressure. It's always been a razor-thin profit margin for them. And increasingly, with competition from Walmart really taking out the middle of the market and coming in with a lower-cost platform, a lot of these chains have struggled. It's important to remember, though, that there's differences between the large chains, and also even within the large chains, there's winners and losers.
Okay, who are the winners then?
Well, surprisingly, perhaps based on your comment, Kroger is really positioned well in some ways because within its portfolio of brands, it has Food for Less, which is competing at the low end of the market, which is one of the areas that is performing relatively well. And it also has King Super, for example, out in Denver, which is more of a higher end quality chain. And so those kind of the high end and the low end that are able to differentiate themselves from the middle of the pack, where Walmart is really dominant, are doing the best.
Do you think these large grocery chains are just not able to raise the prices and pass it along to consumers? You know, for example, when the food manufacturers raise the prices of their products, do the large grocery chains not follow through and raise the prices as well? Is that why perhaps they're having a hard time?
That is certainly, it's a very unusual situation for them. So in the last period of high food inflation in the 70s and 80s, it was actually a fairly good time for retailers because they were able to adjust their prices and get a little pricing power in there. And they could introduce some lower cost store brands. That's where store brands really took off, and they were able to make money on that. This time around, inflation is really sort of isolated in those commodities, in the food products. So they're getting a lot more resistance for passing along food increases. And that really, again, plays to the hand of the low-cost operators like Walmart, who are able to leverage that better.
So how is the entire business model in this grocery industry changing? So less people, for example, are cooking at home, and they're kind of wanting more prepared foods, and that's what they go out and buy?
That's been a long-term trend. So if you look at the long-term trends, spending on food away from home or prepared food is growing, and food prepared at home has been declining, and that's been going on and on. And if you go into a modern grocery store now, you'll see lots of prepared meals, and that's really an attempt to play in that market. So they're not just selling ingredients to be prepared, over a long period of time, cooking and so on.
How do you foresee the grocery store industry? What do you think it's going to look like in 10 years?
Well, it's already made dramatic changes. So there's been a huge amount of consolidation among these three big, Kroger, Safeway, and Super Value have really taken over a lot of the independent chains. And so that's been a big change. Walmart has already grown in and become the largest retailer. So one of the trends going forward include alternative formats. So Walgreens introducing fresh and prepared foods into their store. So you're just finding food at a lot of different places. Target and so on. You're seeing the high-end grow. Now, Whole Foods has been actually outperformed the stock market and the industry in general, and it continues to seem to have legs in terms of really serving that high-end customer or people who are looking for that high-end foodie kind of experience.
Okay, well, lots of changes going on. Thank you very much for telling us all about it. Owen Shapiro, he's a researcher with Leo J. Shapiro and Associates.